Good morning, everyone. Welcome to this TradeStation Masterclass. My name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities. For me, it's always great to join you guys every week to learn a little about the TradeStation technology. Today, we're going to showcase some of the strategy, trading, or strategy elements, functionality that is built in right out of the box that allows you to manage positions. Today, we're going to take a look at some exit components of strategy trading and how you can utilize TradeStation to automate those exits. Okay, so let's go ahead and get started in just a moment. Here are some disclosures that everyone needs to be aware of. Keep in mind that every symbol and idea that I talk about is for educational purposes only. These are not recommendations of TradeStation. Also, that active trading is not suitable for everyone. And past historical performance is no guarantee of future results. Today, we're going to take a look at some of the strategy performance reports and take a look at some of the performance that some of the built-in strategies can provide. And I just want to make sure that everyone is aware that these are just examples and there's no indication of future results. For additional details on these disclosures, go to www.tradestation.com/important dash information. All right, everyone. Let me go ahead and switch over here to my TradeStation platform. I had it open just a moment ago. And again, thank you so much for joining me today. Let's go ahead and just going to resize my screens here a little bit so that I can have the chat window open. Because part of this class, one of the highlights of the class, that it's interactive. So you're welcome to submit any questions or any comments about the class, anything that you'd like to see demonstrated on the TradeStation platform. That's the whole reason why we're here, to make it as interactive as possible. So right here on the screen, and this is maybe something that you haven't seen on the TradeStation platform before, maybe you have, but it's one of the things or one of the tools that sets TradeStation apart from a lot of other trading platforms. It does allow you to test trading ideas against historical data. Of course, TradeStation comes packed with strategies that are, general or common knowledge, and they're based on technical indicators that a lot of you may already use. For example, Bollinger Bands, MACD, moving averages. Those are all already pre-created and pre-programmed for you, and it's just a matter of you taking those strategies and putting them on a chart. Right here, I have a daily chart of Tesla. Let's take a look at how far back this chart goes. I think it goes back 5 years, but I'm just going to check here. This particular one goes back 2 years, which is fine. We can increase the data, back test if we wanted to. For now, 2 years is fine. We're just going to get started with a simple back test and see how we can modify some of the exit components to make the strategy work for us, or at least, take it towards a direction that we want to, a direction that makes us feel a little bit more comfortable with the strategy and provides us a little bit more trust around some of the rules that we are putting into the strategy. Okay. Again, every strategy needs to be developed, every strategy needs to be tested, and every strategy needs to be run against real-time data just to make sure that it's doing exactly what you're intending the strategy to do. So I was saying, this is a 2-year back test. Let me go ahead and click OK to that. And I wanted to start the presentation with something simple like the Bollinger Band. So I'm going to go here to the Studies menu and click on Add Study. And I'm just going to add a simple Bollinger Band. Okay, for those that are not familiar with the Bollinger Band, we'll define it in just a moment so that we can understand, when the strategy is entering and exiting. Okay, so let's go ahead and put that in. All right. And Manoj, as we said at the beginning, this is a chart that goes back 2 years. So from today's date, 2 years back, you can look at, the current prices over here on the top right. and you can see how the chart is updating in real time. So we're getting real-time data in addition to all the historical data before that. So 2 years worth of historical data. And as I said before, TradeStation has a massive historical database that allows you to tap into any, period of history. Because one of the things that you are going to learn as you develop a strategy is that you have to make sure the strategy adapts to market conditions. Not every period in history is the same. Not every period in history repeats itself to the T. They're very similar. There's a lot of similarities. So what happens in the past, yes, sometimes you see a lot of characteristics again repeated in the future, but nothing happens exactly as it happened in the past. We do have some experiences learned from the past, and of course, that allows us to trade forward with a little bit more confidence, a little bit more information. So what we are calling here informed trading decisions based on what the market did in the past. So Bollinger Bands. Bollinger Bands is a straightforward study that draws a moving average right there in the middle. So the gray line is just a simple moving average that takes 20 trading days and averages all the closing prices of those 20 days. So it creates a smooth line of price movement across the candlesticks. Very simple, very straightforward. The blue line and the red line are calculated standard deviations away from that average. So how far away does the price move from that average? At the present time, this Bollinger Band, which is the default parameter, it's measuring 2 standard deviations. So that's about 95% of all price movement are going to be within those 2 bands, the blue and the red. Anytime that the price activity goes above or below, above the blue band or below the red band, it is outside of the Bollinger channel, and is that 5% of time where the price exceeds the channel. Well, those are the interesting areas when the Bollinger Band exceeds those 2 bands, because then we know that the prices are out of what the normal set of prices are. So it's very likely for the price to come back into the channel. Very likely for the price to come back into the channel. It doesn't happen all the time. And that's why I say likely, because that's the way the market works. Sometimes you think something's going to happen and it doesn't happen. But when you reach these extremes, yeah, it's likely for the symbol to go in the opposite direction and then come back to where the prices are common, where the average is. So this is what the strategy does, once it's reached an extreme, either it goes above the blue or it goes below the red. It's just keeping an eye on what the prices are going to do, because as soon as it enters the inside channel, that's when it triggers the trade. So on the top, it's going to enter a short trade because it assumes the prices are going to come down and go back to where the average is. And when it's at the bottom and it goes inside the channel, it's going to go long, because it's going to assume that the prices are going to go back to where they were as an average. The strategy does that automatically. It finds every single instance where the Bollinger would have generated a trade. I didn't insert it this time. What I did is I inserted the indicator, which drew the lines, but the strategy was already there. But if you wanted to use the strategy, you go to the Studies menu and you click on Add Strategy. You're going to find that we have strategy components that you can mix together and create a strategy of your own. Yeah, TradeStation doesn't provide any complete strategies because we're not a recommending broker. However, we do provide you the tools that are necessary for you to do some very interesting testing. In this case, I added these 2 components, the Bollinger Band LE and the Bollinger Band SE. Every strategy component that you see inside the platform will have these 2 letters at the very end, which tell you what is the direction of the strategy. What does the strategy do? And from these letters, we can see that the Bollinger Band LE is a long entry. In fact, if you scroll here to the right-hand side, you're going to see how the action that is checked here is buy. So this is a long entry. It generates a buy. The second one, which is an SE, is also an entry strategy, but generates a short. So these two components are entry strategies that are going to work with each other. In which way? Let me go ahead and click OK. Because as I said a moment ago, the strategy that I just added here to the chart is going to find every single instance where the strategy would have generated a trade. I'm going to scroll back all the way to the very first candlestick of this chart. I'm going to click on the background and I'm going to put my vertical axis on that very first candle. And you're going to see the date right here on my data tips window. It says December 19th, 2022. So this is exactly 2 years ago. So this is the price activity of Tesla. Now, of course, the strategy doesn't start right on the very first bar because the strategy needs a little bit of data to calculate. And it's not until, and by the way, if you want to be specific, it uses 50 candles in order to run the calculations. So it's not until the 51st candle where it's able to put in a trade. Now, the trade will only happen if the criteria for the strategy is met. Now, you can see that at a certain point, the strategy becomes active, monitors the candlesticks, and it notices in this area that the closing price is below the red band. So that's the first check. You have to reach an extreme, and it did it right here. But let me go ahead and zoom in this particular area a little bit more. I'm going to move my cursor down here and select my magnifying glass. I'm going to draw a square around this entry because I want to see a lot of the detail here. So notice that it wasn't this candle. It was this candle that crossed below the red band. The next day, we had another penetration on that red band. And the following day, again, the strategy, what is the strategy looking for? The strategy is looking for a closing price that goes back inside the channel. And that happened right here on this candle, which is March 13th, 2023. When that happened and the candlestick closed, the strategy said, I need to generate a trade. What did it do? It generated a trade on the following bar. It said, buy next bar at market, and it bought 100 shares of Tesla right here, the opening tick of this day, which is March 14th, 2023. Let me zoom out. That makes sense up until now, right? The strategy does not have any exits, which is the focus of today's presentation. But you can see that a few days, or I would say a few weeks later, we see another entry. Let me go ahead and zoom in here and see what happened. In this area, the candlesticks are inside the channel. On this particular candle, which is March 31st, we see the price activity. It closed above the blue band. So this is an extreme. The following day, it closed below. So this is the exact criteria the strategy is looking for. And it says, I need to generate a short trade. But hold on. This is a short entry, right? Let me zoom out for just a moment. We know that from our first trade, we were long. The second trade is going to take us short. Now, on an equities account, of course, you cannot be long and short the same security in the same account. So what happens on this particular entry? Well, the strategy itself decides that it needs to close your long trade in order to take you short. It happens automatically. In fact, let me go ahead and go back here to the background of the chart. And I'm going to position my vertical axis where my first entry was, because it'll provide me strategy information right there on the data tips window. I know the bottom three are the values of the Bollinger Band, but right above those three values, the fourth line from the bottom up, you see strategy buy 100 at 177.31. Those tell you exactly the price that it bought those 100 shares. But notice what happens when I move my data or my data tips over to this entry, the short entry. Now take a look at the information inside the data tips window. Now is not just a sell short or a short. There's two trades. There's one trade that sells 100 shares at 197.32, and there's a second trade that shorts 100 shares at 197.32. So it's called a, sometimes it's referred to as a reversal strategy, where it's always keeping you in a trade and it flips you back and forth between a short and a long trade. The reason why it's doing that is because you have no exit strategies. You only have two entries that are opposing. One is long, one is short, and one will reverse each other. Now, another thing to keep in mind also on this particular, dual trade candlestick, notice that it's sold at 197.32 and it's shorted at 197.32. One of the things that you have to keep in mind is that when you use strategies on software, the software does not know any better about market behavior. Now, how likely is it for you to get out of a long trade and then get into a short trade at exactly the same price? It may happen, but the chances are very, very slim because we're talking about the exact same price. Now, the strategy doesn't know that, and it assumes a perfect fill. But those are some of the things that you have to be aware of, because a lot of times you look at a strategy performance report and you say, well, this is amazing. The strategy is performing so well. I'm just going to turn it on and automate it and make millions of dollars. But a lot of times, you have to be very aware of the things that happen in the market, that, market behavior and the way that the prices move sometimes is not factored in a mathematical formula, which this is just a mathematical formula for the strategy. The criteria is met, I fill. Okay, so as I said at the beginning, the strategy is flipping us back and forth between long and short. And if I go all the way to the very front of the chart, let me just scroll here to the very front. You can see that it does that every single time. Oh, one thing that I also wanted to point out is the strategy only enters one trade in one direction at a time. Meaning, you can see here that I generated, or the strategy generated, a short entry. You see the red arrow. The candlesticks are within the channel, and all of a sudden, we see another penetration to the upside. Everybody sees that? We reach an extreme, and then the price activity drops again. But there wasn't another entry here. Why? Because the strategy was already in a short trade. So if it says, if I'm in a short trade and I get another signal to go short again, I'll just ignore it because I'm already short. Does that make sense? So it only takes one trade in one direction at a time. Of course, you can change that. We can turn this into a pyramiding strategy that, as the criteria becomes true, it'll just increase your position size. But for now, we'll just keep it the way that it is. We do another class on pyramiding, and we'll focus on that topic at a later time. But this is the strategy. Right out of the box, we put it on the chart, and it generates entries and exits automatically on historical data. Do not be afraid of adding the strategy, because the strategy is still not automated. It will not trade for you unless you want it to. There's a couple screens that you have to go through in order to enable automation. For now, it's just working on the historical data, and it's also working on real-time data. So if I scroll all the way to the front, you can see that the strategy right now is in a short trade. Not a very good time to be short, since the prices have skyrocketed for Tesla. From the time that we went short here at the strategy shorted at 335, you can see how the price is now 471. We're talking about $140 difference. This is a losing trade, of course. It hasn't been closed because, again, we don't have any exits added to the strategy, which we're going to work on in just a bit. Yes, Doug. Well, the way that I added the strategy is here in studies. First of all, I added the study. The study and the strategy, even though they're designed very similarly, the study, what it does, it just draws the lines. And the strategy, all that it does, it just finds the signals. So it may seem that they need each other, but they don't. They can work independently. But in here, I have the study, which is called Bollinger Band. Add study to find the Bollinger Band. And then I went to add strategy on the same menu, add strategy to find the same Bollinger Band strategies that I'm adding here, which are these two. One thing that I want everybody to notice here is that as soon as you add a strategy to a chart, you have access to what's called the strategy performance report. I'm going to go here to strategy performance report. And let me go ahead and make this larger. All right. By default, the strategy performance report shows up in an expanded view. If you see, I have an expand button. So it has a lot of additional calculations. If you're into the statistics of this report, you can expand the view to see additional formulas and calculations. A simpler view is available by clicking on the collapse button. It just reduces the number of calculations and gives you a more concise view. We're going to take a look at some of the values here because we want to see how the strategy is performing. And you can see how in this particular case, we have one column, which is the first column next to the labels here, is all trades. We have long trades and short trades. So it does make that separation between long and short so that you can do an additional analysis. You can see how overall the strategy is profitable. Again, this is very specific to Tesla. This is not counting this big losing trade that is happening at the moment, because this is just performance on all closed trades. So that's something to keep in mind as well. And also the separation between the two, you can see how the long trades are doing much better than the short trades. One value that I look at a lot is the profit factor. Overall, we have a profit factor of 3.69, which means that for every dollar that we lose, we make $3.69. That's a good profit factor, of course. This is not a complete strategy. This is not an indication that we should turn on the strategy and trade it forward, because there's a lot of flaws on this strategy still that we need to work through. And I'll talk about that in just a moment. Okay. Armando on the chat is asking, are there any preset strategies that you can test drive before you design your own to ensure you're testing the right concept you're trying to implement live? For sure, yes. All the strategies that you find here, when you go to studies and add strategies, they're there for you to play around with and get a good feeling about how strategy trading works. Because yes, please have a great understanding on how strategy trading works and how the back testing engine works as well, so that there's no surprises. When you run the strategy using the trading simulator and you forward test it, then you have a better idea and you can find something that is robust. Okay. But yeah, any of the strategies there you're able to use and implement. All right. So Alan added the strategy Bollinger Band SE. One of the things that you probably need to do is you need to combine the two strategies. In order for you to see what I'm doing, what I see on my screen, I added the SE and the LE. I added two components because you need something to interact with something else. If you just add one component, that's just an entry signal, which probably did something, but it did it in a historical bar. So if you scroll back on your chart, you'll probably see an entry back there. But since it doesn't have anything to interact with, like for example, here, I have the long entry and the short entry that are flipping and, each other back. That is when you have this interaction is when you have, the multiple entries on the chart. Good question, Jan. For users not familiar with TradeStation, where would you suggest starting to learn backtesting on TradeStation? We have, many videos talking about strategy testing. The whole masterclass series that we do on Tuesdays, like today, we have that masterclass series recorded. So if anybody's looking for education, what I would recommend is you go to the apps menu, Let me close this performance report for just a moment. In the apps menu, you're going to find an app called Video Station. Sorry, Video Station right here. I guess this is one of the easiest ways to find those videos. Video Station. Video Station is a trading app that loads the videos that are on YouTube. It's a very interesting trading app. You can access those videos from within the TradeStation platform. But the nice thing about this app is that it organizes the videos using these tabs. And if you go into the masterclass, you can go right into the strategy elements series, where we record every trading strategy class. And you have, testing moving averages using the moving average machine, automate the trend line strategy. You have a series of different topics that give you a lot of insights into trading strategy. So make sure that you go in here and take a look at some of these recordings. All right. We talked about the flaws of the strategy. Let's take a look at some of them. Go to strategy performance report. One of the first flaws is the total number of trades. How many trades are in the strategy? 13 trades. In a historical backtest, 13 trades, it's a small number, it's a small sample to get a robust number of statistics. There's only 13 trades. That's not many trades in a time span of 2 years. If you look at the time span here, it's 2 years. So we're talking about only 6 trades per year. That's not that many trades. How likely is for the markets to do exactly what they did in the past 2 years and get exactly the same 13 trades? Very unlikely. So that's one of the first flaws. It doesn't have enough trades to have a robust behavior that you can trust and that you can be confident about. Profitability is fine. 69% of the trades are profitable. Another thing that probably I would want to check is this largest losing trade. We have one single trade that lost $5,000. If you take into account your total net profit, your total net profit here is 25 grand. So $5,000, we're talking about 20% of our total net profit is one of our losing trades, which is not something that it's not something that I would want in my strategy backtest. I don't want to have these large losing trades. Take a look at the largest winning trade is $11,000, which is something that stands out as wrong in my strategy because one single trade is almost half of my total net profit. If I'm depending on just one single trade for the historical performance of this report, then this is not a report that I would trust going forward, because how likely is for you to have that single trade one more time going forward? So those are first two things stand out as red flags. This is not a strategy that you would want to do. Even though the numbers up here look great, you start looking down and drilling down on the strategy, it doesn't seem like it's good, okay? Let's see. This is another thing that catches my eye. Percent of time in the market. You are in a position 98% of the time. Now, we know that the longer you are in an open position, the more risk there is. So if you're talking about risk, this is a very risky strategy. If you're in the market 98% of the time, when do you have time to take a break? These are the type of things that I look at the strategy and say, I'm not going to be glued to the computer 98% of the time when the markets are open. It's something to keep an eye on, right? And also drawdown. The drawdown is something that we look at all the time. Like, take a look at the maximum trade drawdown, $11,000. At a certain point in the strategy backtest, yeah, you were losing that amount. When you look at performance graphs, it gives you a better picture of where the trades have gone and where the profitability is. So I'm going to come over here to this tab that says performance graphs, and I'm going to, yeah, this is my equity this is a good graph because it tells you where your equity has been. Of course, the zero line down here, the strategy has not been on the negative side, which doesn't really make it good. But what you see here is that it's been spotty, the performance. You started at 2,000, it went up to 8,000, then it dropped back to 2,000, and then you have all these spikes going up and down. Drawdown, Manoj, is how far the strategy went on a negative side, but didn't realize that loss. Sometimes you are in a losing trade and you keep that trade open, waiting for the trade to recover, and the farthest it goes down on a losing, on the losing side, that's what we call drawdown. The maximum drawdown is what is the potential risk of this strategy is exactly that bottom, that trough that you reached, because you could have, exited your trade at that amount of loss and realize that loss. So that's pretty much what drawdown is. There is a graph here called equity curve underwater weekly. Take a look at this graph because it's very telling. This graph right here, and I know that we're not talking about performance graph, but this is a graph that I look at because it actually tells me when my heart is bleeding. When you're trading, you're very committed, you're very emotional, but when you start losing money, that's painful. And you can see a lot of red here, and it represents the equity drawdown. Even though when you look at the equity curve line, it never reached the negative side because you never closed. Well, in this particular case, you had some losing trades, but your equity never went to the negative side on a realized trade. It did go to the negative side on an open trade. For example, right now we are in an open trade that is losing money. We talked about it just a moment ago. We are in a short trade, but it's not seen here because it's still open, and the strategy, or in this case, Tesla, can drop and that trade can become a winning trade. But if you look at this graph that says equity curve underwater weekly, it tells you how much time you were underwater. So you can see this is percentage. We were at almost a 12% negative drawdown at one point. So it's not only what you see in the summary that matters. You have to drill down and see what the behavior of the strategy is, because maybe the first period where this strategy went on the negative side right here and almost reached the 9% drawdown, at this point, a lot of traders would have said, I'm just giving up. I'm not following through with the strategy, and I'm just going to quit. So that's the type of graph that you have to look at and see if that's something that you would have tolerated going through each one of these trades. Okay, Armando is asking, can you build a strategy from scratch without any knowledge of easy language? Okay, Armando, if you don't have any knowledge of easy language, it's going to be tough to customize and create something from scratch. We call easy language because we use English-like terms. So it's not very difficult to set it up, but you will not be able to create something custom without any knowledge of easy language, because you do need a little bit of easy language to put things together. We have a discussion forum on easy language that provides you support if you need assistance. But let me go back here to my exits, because I find the strategy trading topic something really fascinating, and sometimes I go on a tangent because I do believe that the tools are really amazing and how it allows you to test trading ideas. But let me show you something cool. Let's say, for example, that we go back here to the strategy performance report. Let me go to the performance summary. We already established that my long trades are doing better than my short trades. And, on a security like Tesla, which has been on an uptrend for a long period of time, it makes sense that the long trades do better. So I may want to shut off the short side. The short side doesn't seem to do as well as the long side. I can do something really quickly here on my strategy. I can leave it on. Let me go ahead and customize it. I added, one SE accidentally. Let me remove that additional one. But the short entry, I can come here and say, instead of leaving the sell short on, I can use the sell short signal as an exit only, which is interesting because remember, we're changing the nature of this particular strategy because it's designed to enter a short trade. And what we're going to use it for is instead of entering short, it'll just use the same criteria, but to exit my long. I'm just going to click on close. And here we go. Take a look at this trade that we singled out just a moment ago that we said, oh, this is a losing trade. Now it's not a red signal anymore. It's a white arrow, which is just an exit. Now we're not open to the market anymore. Of course, we're losing, this uptrend, but that's another story. Based on the Bollinger Band, it wasn't time to go long. Remember, the long entries are entered down here. But this is a very good trade right here from this bottom to this top. So let's go here to the strategy performance report. You can see that immediately our profit factor jumps to 16.4, which is what the long trades profit factor was. Of course, we have fewer trades, 7. I would still not call this a good strategy because it's too few trades. But we made the performance better. Now, if we look at percent in the market, look at the percent time of the market. We dropped it to 37% from 98% of time in the market. Now we're down to 37% because we're only taking those long trades and we're closing them and waiting until another long trade happens. So we dropped that significantly. Now the maximum trade drawdown also dropped. If we look at the performance graph, of course, we still have a lot of drawdown, but we have fewer trades, only 7 trades. How do I make it trade more? We can load more historical data. If I go here and I say, well, instead of 2 years, let's do 10 years worth of historical data. In 10 years, this is what it looks like. Let me go to the performance summary. And there you go. The profit factor dropped, but our net profit increased. We have 28 trades happening and 78% profitability. Okay, so let's go ahead and take a look at some other things we can do. We still have a losing trade here of $5,000, which is not good. Some exit components that are part of the strategy engine. Let me go here to studies. I'm going to add a strategy, and I'm going to use something that I don't use a lot, but I think it has a lot of exits, a lot of ways of managing exits, which is really cool on strategy trading, and it's called underscore stops and targets right here. This is a built-in strategy. It's not custom, it's built-in. You should have it. And I'm just going to add it. Okay, so I need to modify this. Let me go to studies, edit strategies. All right, so stops and targets, and let me customize this. All right, so these are all the parameters of this strategy. Let's see if we have time to go through all of them. Position basis is set to false. False means that it's not based on the position, it's based on a per share. If you want to base it on a position, then you turn this to true. What that means is simple. When you think about losses and profits, are you thinking on your position overall? Like, for example, you're saying, I want to make $1,000. That's your profit target as a whole. You're thinking of your position, right? As opposed to saying, I want to make $10 per share. If you make $10 per share on 100 shares, that's the same thing, $1,000. But you think of a profit based on point movement. When your position basis is false, you're thinking in points per share. And that's why when you see the profit target amount here, profit target amount, it says $5. So $5 on a 100 share position, it's $500. I'm going to increase my profit target here to 20 points. And I'm going to set my stop loss here to 10, a 2-to-1 ratio. So my stop loss at 10, if I'm trading 100 shares, means that I'm setting my stop loss to $1,000. Those are the first two that I'm setting up, and I'm just going to click OK. So now you can see that certain trades, so for example, right here, hit my profit target. I hit my profit target over here. I hit my profit target over here. Maybe my profit target is a little too tight for Tesla, which is trading at $400. But now if I go to the data and go to strategy performance report, I can see what effect that change had on my strategy, and it had a significant negative effect. You can see that I gave back all my net profit by just adding those two strategies. Now, of course, it wasn't the numbers that were appropriate. So let me show you one other thing you can do. Let me go back in here, go to my stops and targets, and I'm going to customize this. All right. In addition to the profit target and the stop loss, you also have a break even, the break even floor amount. The break even floor amount just means that you have to reach a certain floor in order for the break even to be activated, and you have to specify how many points that is. You have a trailing amount, you have a percent trail amount, and you specify the percentage, and you have the exit on close. Those are just different types of exiting and managing your position. But what I wanted to do is I wanted to let the strategy tell me what would be an appropriate profit target and a stop loss for this strategy, which is pretty cool. And we do a lot of classes here on optimization, but let me go ahead and show you what this is capable of doing. I'm going to go here and highlight the 20, click on optimize, and I'm going to tell TradeStation to test from 10 all the way to 100 in increments of 10. So it's 10, 20, 30, 40, 50, 60, 70, all the way to 100. All right. And on the stop loss, I'm going to do something similar. I'm going to go to 5, all the way to 50 in increments of 5. So 5, 10, 15, 20, and so forth until it reaches 20, until it reaches 50. I'm sorry. I'm going to click OK. And I'm just going to click on OK down here. That is going to give me a test count of 100. This is there's like letting TradeStation run all the different scenarios and tell me, what stop loss amount and what, profit target would have been ideal for this historical backtest. And I want to emphasize that, because when you optimize a strategy, yeah, you're kind of curve fitting your strategy to what has happened in history. And then of course that's going against what strategy development is all about, because how likely is it for the market to do exactly what it did in history? It's very, very unlikely. So, but at least, we get an idea of what is the vicinity of the values that we should be looking at. Let's put it that way. Then we're going to click on optimize. It runs and it applies the values for me automatically. If I go back into the strategy setting, you can see that the values that it selected was 100 for the profit target. So it was the maximum, and the stop loss was 25. Interesting. Now, if I go back here to the data and strategy performance report, we can see how it actually, adapted. Now we still have this largest losing trade. Sorry, I clicked on it. This largest losing trade at 3,133, which is okay. I mean, okay to the strategy that we're testing. Remember that the stop loss amount that we put in there was 25, so it was about 2,500. There must have been a gap in history that generated that loss. Let me see if we find it. Here it is. Is that the trade that generated the biggest loss? No, maybe this one down here. If you want to see which one is the trade that generated the biggest loss, just go back to the strategy performance report. We have a trade list that gives you all the values. This is the profit and loss. If I scroll down, I can see, several $2,500 stop losses being triggered. Here's the one that's 31.33. It happened on May 12th, 2022. So if I go to May 12th, 2022, it's right here. Yeah. See, we were continuously generating short trades on a downtrend because we were reaching that extreme. Maybe the Bollinger Band is not such a good strategy on this particular, market conditions, but we can see how the stop losses kept on getting hit every single time we entered a long trade. So not a good strategy for this stock. Let's go ahead and take a look at some of the questions that are coming through here. Yes, Armando, in terms of learning easy language, again, just to get an idea, how flexible on and what are the things you can do with easy language, go back here to apps, click on video station, and in the same masterclass section that I showed you previously, you're going to find one that's on easy language or leveraging easy language. And you have easy language classes that teach you a little bit of programming. Take a look at, those classes and see if learning a little bit of easy language is something you want to do. So I do a lot of classes on easy language too, because I think that little bit of knowledge of easy language allows you to customize your strategy to the way that you want it to be. So I think it's very valuable to know a little bit. Manoj, you're absolutely correct. If you do a shorter time frame, you would get more trades. And what he means by that is right now I'm on a daily bar. So I'm in a daily chart. So every candlestick represents a day. So sometimes, you could be sitting here for days waiting for the strategy to generate a trade. But if I turn the strategy into I don't know, let's do a 5-minute chart. And I say in 5 minutes, let me go ahead and do 6 months of data. Of course, that's going to generate a lot of trades. Now, of course, I modified my strategy a little bit, but let's go here to the strategy performance report. And this is the performance of the strategy. We have 102 trades in a time span of 6 months because we changed the frequency of the bar building. Remember that the strategy is always sensitive to the number of candlesticks that are on the chart. And this, especially this one, which is looking at, how the candlesticks are crossing over or under those Bollinger Bands. If you change the time frame, of course, there's going to be more opportunities for the strategy to generate more trades, for sure. Definitely. Thank you for that, Manoj. Jan is asking, when backtesting, is there a way to hide some historical data for walk forward to avoid over optimization? For sure, Jan. We have all that technology built in. Let me show you that here very quickly. If you go into the optimize window that I just showed earlier, for example, if I were to optimize this and then optimize the same other value, you can go into advanced settings over here on the right-hand side, and you can exclude data either as a percentage of the amount of data that you have there or a particular period of time that you want to set as an out of sample window. And TradeStation will generate the performance report on both periods, the in sample and the out of sample. In addition, to this piece, we also have a tool called the Walk Forward Optimizer, which, is this, but on steroids. So it pretty much gives you all the different functionality if you want to really do a walk forward optimization. All right, so that's my class for today. I wanted to talk a little bit about how to add strategies to the chart, how to work a little bit with exit components. One thing that we did is changing the short entry into an exit strategy. And I showed you how to do that. I also showed you how to add this strategy that is built into TradeStation _ stops and targets. That gives you a lot of position management tools. Like it has a profit target, a stop loss, a break even, a exit on close. So it has a lot of ways of managing your account, and you can, play around with some of those settings. And I think that's what we did. We looked a little bit at the strategy performance report. That's where you're going to be going many times just to see if the strategy makes sense or not. How did you add 6 months of data at the command line like you did during the presentation, Doug? Yes, something that I do is I request my data through the command line. So if I wanted to do 1 year worth of data, I just type in 1 year. Or you can do 6 months. I did 6 months just a moment ago. That is interpreted as a historical data request. I can do 5 or 6 years if I want to, or I can do 24 months. So the data requests can be in weeks, months, or years, and you can just type in any number, and TradeStation will go ahead and request that data for you. Manoj is asking, can strategy trading keep running when you are away? Theoretically, yes, Manoj, it's possible. I can format my strategy and turn on this section that's called automation. Automation is just letting TradeStation put in the trades based on the conditions and the rules that you put into the strategy. So if you program the strategy a certain way and you say, I want the trade to be entered when these conditions are met, then TradeStation will follow through. We'll follow through with different levels. We'll follow through with confirmation. Maybe you do want to still be the last call in placing that trade. So you can set up a confirmation and say, hey, strategy, if you find a place where you're going to enter a trade, let me know first, give me a confirmation, and then I'll press the button to place that trade. That's automation with confirmation. But if you really want to automate it, and be away from your desk, then yeah, you can do that as well. Be aware of this is designed for you to be present and be, there when the strategy needs you. There's a lot of questions that the strategy does not know how to answer. Sometimes the strategy does get confused, and it's your help deciding what to do, especially if there's a hiccup on the internet, or there's a recalculation, or there's a power outage, your computer, restarts. Anything can happen that throws off the strategy, and then the strategy is going to need your help to continue. So yeah, this whole technology is designed to, free up your hands and give you some flexibility, but at the same time, it also requires you to be present at the times that it needs your help, okay? Yes, well, you're welcome, Armando. Thank you for that. TradeStation is still running on 32-bit. Yes. Is there a roadmap to move to 64-bit? Yes, there is. TradeStation is working on a lot of new technology and new things that are ongoing. So we are aware of the limitations of a 32-bit software, and TradeStation runs on 32-bit. But we are working on solutions for that. So thank you for asking, Yan. So that's it. Thank you so much for your time. Thank you for being part of the TradeStation family, joining me in this masterclass. One thing that I wanted to comment is that we are going to take a break on webinars for the week of Christmas and the week of New Year's. So make sure that you check the calendar of events to make sure if there's a class or not. But the week of Christmas and the week of New Year's, we are probably not going to have a live event like this, but we have plenty of recordings on the TradeStation YouTube channel and also on the TradeStation website. Thank you so much for joining me today. Have a wonderful afternoon, and I'll see you next time. Happy holidays, everyone, and I'll see you next time. Bye-bye.